So what I want to do is provide you with a quick overview of how the active live service works, all these different windows that you see. We are basically applying two strategies. One is the intraday pullbacks, and the other is the worm strategy. Now we have two versions of the worm. We have the worm long and the worm short. So let's start with the thing that we do first, which is the worm long strategy. That is this central screen here. And on that central screen, it is calculating for you with an algorithm all of the entry signals for the worm strategy. And so what I do in the morning is I run a scan, and I'm going to just jump to another screen just to show you what it looks like. So this is another screen that I have where you can see my scanner. And in the morning, I run a scan called worm scan, and I run that. And I grab all of the stocks that come up in that scan, I copy them, and I paste them into this window, which we'll jump back to on this screen. So I paste them into this window, and the algorithm calculates all of the entry signals and sorts them by time. So here we have all of the entry signals that occurred at 9:32 in the morning. These are the 9:34s, 9:36, and so on. Now I run this process until 10 o'clock, but based on data, I have found that the most profitable trades all come between 9:30 and 9:42. So after 9:42, I don't pay a whole lot of attention to them. I'll take a look at the chart just to see if there's something that I really like, but generally speaking, I only enter those trades from 9:32 to 9:42. Now this particular strategy is based on the 2-minute chart. So we're looking for the Stockscores action candle on a 2-minute chart, breaking with certain other characteristics, and those characteristics are encompassed in the algorithm here. I won't go into all those characteristics. If you've taken the Stockscores Active Live course, then you know what those are. Now, what do we see in these fields? Well, the first column here is the capital. That's the capital required to take a $100 risk position. So this first stock, Alibaba, is a $187 stock. It takes a lot of capital to take $100 of risk. It takes $30,500 buying 160 shares. Most people would shy away from those capital intensive trades. On the other hand, you have, I don't know, that's fine. Like CA, well, that's pretty capital intensive too. Let's try NEAT. NETE only takes $1,500 of capital. And that's because it's a more volatile stock. So as we go down the list, we can see the capital required, the number of shares for $100 of risk. Now, if you prefer to take $200 worth of risk, then you are going to double the number of shares. Now, keep in mind that when you see the capital requirement here, that's using no margin. And when we day trade, most day trading type brokerages will give you 3-to-1 margin. So to take the position in JD, it doesn't take $12,000 of capital. It takes 1/3 of that, just a little over $4,000 of capital. Now this number here, this column RR, is the current reward for risk that has been earned. So as of right now, JD is up a reward for risk of 1.11 RR. That means if you took $100 worth of risk, you're making $110. The drawdown column shows how much the position went down before it went up. So in this case, it went down 0.4 of an RR, which means for $100 of risk, it went down $40. So you make $110 and it went down $40 along the way. This column here is the number of times it traded on the entry candle. We use that to, put our preferences in. The more liquid the stock is, the more I like it. And so a stock that trades 1,000 times on its entry candle is really giving you a more reliable message than one that traded 76 times. Okay. Candle percent is the percent range of the candle's close. So on our entry candle, this JD closed at 92% of the range. And that's another criteria in the strategy. It's all factored into the algorithm, but some people like to see the number, so it's there. And then sort just allows me to sort that column. It shows the time that the entry signal occurred. So PRGO is the best one today. It is up 5.1 RR, and it went down before it went up 2.1 RR. It had a 54% range, or 54 action candle ticks, 87% range, and the entry signal occurred at 9:32. All right, so we run that process from 9:30 till 10. But again, I tend to take only the entry signals from 9:30 to 9:42. Once we get to 10:30, we're going to start running the worm long strategy. These are the stocks that we would short sell if we like the pattern. Between 10 o'clock and 10:30, I build the intraday pullback list. The intraday pullback list gives us our intraday pullback signals with an algorithm. Again, it's all automated. So when you hear the word strategy alert for intraday pullbacks, you basically then take a look at the chart, see if it meets the requirements of the visual components of the strategy, and you take that entry signal. How do I build this list? I begin with a scan using that other screen that I showed you earlier, where I'm looking for a liquidity requirement. And then of the stocks that are liquid enough, trading actively enough, I then calculate the expected abnormal volume for those stocks, and the ones that are trading with statistically significant abnormal volume get picked up, and I would then watch those stocks for an entry signal. When the entry signal comes, the computer finds it for us. It will say the words strategy alert. You can then pull up the chart and inspect it to see if the pattern is the right pattern. Most of these would have the right pattern, but they may not have the indicators in the right values. And so there we show the values of the indicator as well. And again, those rules taught in the lesson in the Stockscores Education Center. All right, this is a summary of all the trades of the intraday pullbacks through the day, as well as their reward for risk earned. This is the sum total of the reward for risk earned so far today. So you can see that it is up $255, which means it's up 2.5 RR. If you take $1,000 of risk, then it's up $2,600. If you take $100 worth of risk, it's up 240. You can see it moving quite quickly. All right, and then finally our worm shorts. Same concept as the worm, except we're looking for a Stockscores action candle to the downside with some other rules built into that. And again, the algo calculates all the rules. When you hear the sound of a submarine going down, that ahuga sound, that means that an entry signal has been triggered, and you can then check the chart to see if it looks like something you would want to short sell. And I recommend doing that because you get a lot of entry signals with the short worm, and so you want to take a look at all of them and see which ones have the right kind of pattern. But just quickly, if we look at PRGS, it took $4,000 worth of capital to buy or short sell 90 shares. It's currently a profit of 3.67 RR. The drawdown on that trade was 0.19 RR. It traded 126 times on the entry candle. The entry candle occurred at 9:32, and the candle percent range was 85%. Same as this screen, just the inverse of it because we're looking for short sell candidates. So that's a quick overview of this. Then, of course, in the last half an hour, we do the action break strategy where we're looking for action candles on the daily chart breaking through resistance. So, for example, here we have the daily chart of BKCC, this stock making a statistically significant price and volume gain. That is why there is a pink dot on the daily chart. It's also breaking its trend line. So I review all of the candidates for the action break strategy in the last half an hour, starting at half an hour before the close, inspect them, give you my thoughts, and I rate them out of 10. So this particular one, I rate a 7 out of 10. The ones that are 8 out of 10, I would consider to be really good. 7 out of 10s are pretty good. 6 out of 10s are kind of a marginal trade. And then we follow those as they go. Just to give you an example of a recent action break candidate, it was right here on February 20th. There you can see a similar pattern set up to the last one we looked at, BKCC. This is ECYT. There you have an action candle breaking a downward trend line. The action candle is a algorithm that I have written for TradeStation. It basically looks for statistically significant price and volume activity, and it predicts stocks that tend to do quite well. And we look at those in the last half an hour. This one has made a pretty good jump. So that's a quick overview of the Active Live service. Hopefully that gives you a little sense of how this all works. And if you have any questions about how you subscribe to Active Live or anything like that, go to the Stockscores.com website and go into Stockscores analysis. The Active Live service has its own page, and you can learn a little bit more about it there.